Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A deal is done. The US Commerce Secretary tells Bloomberg a trade agreement has been signed with China with imminent plans for another 10 major trade partners. The EU says it's ready for a deal, but all options remain on the table. Global stocks head for a record after the Nasdaq closes at another all-time high on optimism over US rate cuts. Plus, revenge tax, RIP. The US says it will drop its Section 899 tax threats after reaching a deal with G7 allies. Good morning, happy Friday. European futures then on the front foot, pushing high by around 0.5% after a pretty muted close, still in positive territory by the end of the close yesterday for European equities, now set for weekly gains. The US market, Wall Street closing on a high again, with the Nasdaq 100 notching that fresh record high. Gains of more than 1% for the Nasdaq 100, gains of around 0.8 for the S&P 500, which is within sniffing distance of its own record high. FTSE 100 futures looking to add just 10 points. S&P futures then looking to build on the gains of yesterday, pointing higher by 0.1%. Nasdaq 100 futures looking to add 20 points. The consumer sentiment survey came out softer, so again, concerns about the retail space and how much the consumer in the US has in terms of cash left in its pocket and demand, of course. But that is leading to expectations that the Fed could go more aggressively on rate cuts. Let's split the board and have a look cross-asset. 2 cuts now fully priced in for the Fed. Bets increasing as well, potentially on a third. A 20% chance being priced in by these markets for a July cut, though officials have kind of pushed back on that narrative. The MSCI Asia Pacific looking, of course, in the bright space, in the green, up 0.4%, and you are seeing those Asian equities broadly seeing some lift today. The conversations around the US and China, of course, part of the optimism there. 4.25 right now on the US 10-year. Yield moves just 1 basis point, but you did see, of course, yields lower yesterday again on recalibrating around the Fed. Euro dollar at 116, actually seeing a bit of dollar strength in the session today for the first time in 4 sessions. So the euro is under a little bit of modest pressure, just down 0.1%, and Brent at $68 a barrel, up 0.5%, but set for one of its biggest weekly drops in quite some time, of course, as a result of that truce that remains around Israel and Iran. Now, US Commerce Secretary Howard Lutnick says Washington and China have finalized a trade truce. The deal sets out terms from earlier talks, but still depends on future actions.
So the China deal, we inked the deal. You remember we had a trip to Geneva, and then that was being slow played. We got back together in London, and that deal was signed and sealed 2 days ago.
That, of course, was Howard Lutnick speaking to Bloomberg yesterday. For more on Bloomberg's Scoop, our China correspondent, Min Lo, joins us with the details. Min, what do we know then in terms of what this deal actually includes and how significant it is?
Modification of whatever had been agreed upon at the Geneva talks and the London talks. He says China will agree to continue to sell these rare earths to the US, and in exchange, US will roll back some of these curbs, including, in particular, he mentioned the flow of ethane back to the US, back to China from the US. US placed limitations on the sale of ethane. This is a chemical that China relies almost exclusively on the US on. It is essential for the making of plastic, and already some plastics factories in China are at risk of closure because of those trade curbs. But he didn't mention some of the other big sticking points, including top of mind are things like chip curbs, the curbs on chip design software, jet engine parts. No mention of these and whether they will be part of the terms of the agreement. And the other critical thing is that we have only heard one side of the story so far. Lutnick saying this was signed 2 days ago, but so far we haven't heard any confirmation from the Chinese side that this deal exists. So certainly something to watch out for. This afternoon, there should be a press briefing from the Chinese Foreign Ministry, and we want to see whether the Chinese side will offer us more information about this deal.
OK, so we'll wait for confirmation and details from the Chinese side, potentially. Markets are certainly reading optimism into the momentum around trade. And Howard Lutnick telling Bloomberg that the White House is also closing in on plans to reach agreements with other major trading partners. I guess the question is, do we know who they are? Do we know how close those deals are? And do we know if they're going to be significant surface level or deeper trade agreements?
Well, I don't have any of the answers to those questions above. We just know that July 9th is the deadline, right, for the end of the temporary reprieve on those tariffs. And so that's the deadline that Washington is working towards. And Howard Lutnick is saying that U.S. is looking to sign trade deals with 10 major countries. He didn't name names, but he said these would form a template for other countries to follow. And he seemed to have divided the world into buckets according to the level of trade imbalance with the U.S. and according to geography as well, because he gave some examples. He said there would be a South American trade deal, there would be an African trade deal. But the key question here is, because we know that the U.S. is set to publish the findings of those probes into specific sectors like semiconductors, critical minerals, pharmaceuticals, that could lead to further sectoral tariffs. This could be a barrier to U.S. signing trade deals with other countries, because just from our reporting from sources, we understand that many of these countries are not wanting to sign the trade deals before these sectoral tariffs are announced, because the last thing they want to do is to agree to some painful concession before then finding out that actually there are going to be more tariffs, sectoral tariffs, that will stack on top of the country-specific tariffs. So that's something that a lot of people are watching for as well. India, for example, is one country that doesn't want to front-run the sectoral tariffs. Japan as well, they have indicated that they want all of these sectoral country-specific tariffs to be negotiated all at one go. And so everybody is still waiting for more clarification from the U.S. on that.
Yeah, that is the complexity and the uncertainty that continues, of course, around these supposed trade agreements. Min Min Lo in Hong Kong, wrapping up everything we've been hearing, of course, from the Commerce Secretary on US-China and, of course, those potential additional 10 agreements. Thank you, Min Min. Now, the European Union, meanwhile, staying on the similar topic, says it is prepared for all eventualities in its trade negotiations with the US, including a breakdown in talks as the bloc goes through the latest proposals from the White House at a summit in Brussels.
We are ready for a deal. At the same time, we are preparing for the possibility that no satisfactory agreement is reached. This is why we consulted on a rebalancing list, and we will defend the European interest as needed. In short, all options remain on the table.
OK, all options remain on the table. Joining us from Brussels is Bloomberg's Oliver Crook, who, of course, was covering that EU leaders meeting for us yesterday. Ollie, some EU leaders then pushing for a quick solution as the deadline looms. How much division is there amongst EU leaders at this point?
It seems at this point that they're coming slowly together to a more sort of pragmatic approach, Tom. And we should say that, we are now, a week and a half away from that deadline, July the 9th, where the United States would impose 50% tariffs on the European Union. That is obviously a situation that everybody here in Brussels wanted to avoid. The United States probably also wants to avoid. But we should keep in mind, Tom, this is the biggest trading relationship on the planet. So from the EU's perspective and also from the U.S.'s perspective, it's really important that they get a deal right here, and it's one that is relatively balanced. That being said, it appears that the consensus around the table is moving a little bit towards a direction of pragmatism. We heard from the new Chancellor of Germany, Friedrich Merz. This is his first EU leaders meeting that he's ever had, saying that it's better to go fast and simple than slow and highly complicated. We need to reach a result quickly. We have all agreed on that. There is no disagreement at all. We've also heard similar comments from Giorgia Meloni, who says she's willing to accept some asymmetry, we think, in terms of a trade deal with the United States. But the question is here, Tom, fundamentally, how asymmetrical is this deal going to be with the United States and the EU? Where are they willing to make these concessions? We don't have a very clear answer from the EU at this point. That's why they say that all options are still on the table. I think that the base case, Tom, is that at this sort of minimum, the best case scenario is you're going to have a minimum 10% tariff from the United States and the EU. The question is, with that 10%, will you get retaliation? We've heard from the French that they'd sort of be open to that, but that's going to be the sort of active conversation over the last couple of weeks as we really sort of reach crunch time for those trade negotiations.
Well, talking of the French, Ollie, how willing is President Macron and the French government willing to accept that potential asymmetry in any deal with the US?
Yeah. Yeah, so that's something that we've been reporting a lot on and we've been tracking very closely. And it seems at this point that the French are sort of moderating that position a little bit. So we heard from Johannes, he's the Commissioner for Industry and Competition here. We reported this a little bit earlier in the week that basically a 10% tariff would garner a retaliation from the European Union. It seems that there is potentially a moderating of that position. That being said, you know, I think that the Macron is also very conscious of another dimension here, which is the Trump psychology dimension here. Is it better to sort of placate Trump, or is it better to stand up to him? There are different schools of thoughts on this. He was saying that basically if you are not willing to stand up to him, you're going to appear naive and you're going to appear weak, potentially both, and the EU is neither of those two things. That being said, again, this will rely on the sort of appraisal of what Trump's appetite for escalation is. We should say there are also other sectors that the White House is trying to target. And I caught up with the competition commissioner yesterday, Tom, the one who's sort of in charge of all those big antitrust fines on those American tech companies. We know the White House wants to target those in some of the trade deals. I asked her if basically that's on the table in any sort of trade negotiation. Have a listen to what she had to say.
We do not challenge the United States on how they implement the rules or how they adopt the regulation. I think that we deserve respect the same way. And I think that the Digital Markets Act is a very good proof of how we can be much more effective, much quicker, and much cheaper when implementing a well-functioning market in the digital context. So I'm very proud of what we do.
So, Tom, from the EU's perspective, you know, the digital regulation is not really on the table. But again, I think this speaks to a broader concern that you have among the Europeans. You have, so Min was alluding to it earlier. We still don't have the sectoral tariffs. And always the perennial concern with the Trump administration is that they may get something and then come back for more. So the EU, apart from all of these sort of trade negotiations, they're also thinking their broader term of de-risking from the United States, moving forward with the Mercosur deal. That's the big trade deal with South America. But also, and this is part of the conversation yesterday, leaders talking about an alternative to the WTO, which they think is sort of dysfunctional. So longer term, you may get a deal with the United States, but Europe is really thinking about how they can de-risk from what is a very volatile administration in the United States.
OK, so that process and that thinking and that debate continues. Bloomberg's Oliver Crook on the ground for us in Brussels, of course, as we count down to that July the 9th deadline around trade. Ollie, thank you. Now, President Trump has ramped up, meanwhile, his criticism of Fed Chair Jerome Powell, almost on a daily basis this week, it seems, he's repeatedly, of course, being accused of being too slow to cut rates. Trump took another swipe at Jay Powell at an event at the White House yesterday.
And if we had a person over at the Fed that would lower interest rates a little bit, that would be helpful, too. It's hard to believe. This is on top of, you know, we have to fight this guy. He's not doing the job. Each point that he keeps it up is the equivalent of $300 billion. $300 billion. So if he lowered it to, it would save $600 billion.
OK, let's bring in Bloomberg's Valerie Teitel in terms of how the markets are thinking about the fate of Jay Powell. And a reminder, of course, his term doesn't end until May 2026. But as I mentioned, almost on a daily basis this week, Trump has been lashing out at Jay Powell. I wonder if this screams of modest Trump panic about the state of the US economy. Some of the data is looking a little softer. How are the markets thinking about the Fed chair and what we've been hearing from other Fed officials in terms of market pricing?
Look, I think the risk is that in the July meeting, we could see that political pressure is already having an effect. We've heard quite often from Fed Governor Waller, who's also on the short list for Fed chair, about his, his support of a July Fed cut due to the fact that he does not believe tariff-induced inflation will be long-lasting and wants to protect the labor market instead. In some way, you can read into Waller's comments that he is setting up for a dissent at the July meeting, and maybe you'll have Michelle Bowman joining him as well, who's also been vocal about a July cut earlier this week. So you could have two dissents facing Jerome Powell at the July meeting. And the question is, Tom, do others seem to join him, wanting to win some political points with Trump dissenting against Powell's hold on interest rates? That could be something that could really lessen Powell's hold on the FOMC board. We did see a similar thing happen even to Paul Volcker. He had a few dissents on his term at the end of his term that really weakened his position. And you can see how with a few dissents at the July meeting, maybe there will be more voices calling for Powell's resignation, which could be something that could really shift the markets if we do have a new Fed chair, perhaps before his tenure ends next May. Now, it's something he's really pushed against. He said that he's wanted to serve out his tenure as Fed chair, so another 11 months. But that would definitely be a new catalyst for the market. You combine this with the already, the known pressure on these names that the Trump administration has floated as his successor. There does seem to be a dovish shift going on in terms of Fed pricing moving forward. You've seen the pricing for July now creep up to 20% chance of a Fed cut. And then if you look out just how the Treasury market has been reacting, we're now headed for a third week of gains for the Treasury market, especially that 10-year yield dropping some 17 basis points over the last 3 weeks. This is already having an effect on the market.
I think it's really interesting how you frame it around July and potential dissents then, because I can't remember the last time. Was it 2024, Michelle Bowman? And that was the first dissent since 2005.
Yeah, Powell has not had many dissents.
He has not had many. So we look to July potentially for those two dissents and what that could mean going forward. The data, I talked about the softness of the US data. We have, of course, that core PCE, personal consumption expenditures data out later today. So that's the core measure in terms of inflation that the Fed looks at. How important will that be?
It will be very important. And I think it might reflect a bit of what we saw in the revisions to GDP yesterday. We saw in the GDP revisions that the services spending components were revised lower. So what we thought of as in the first quarter as a resilient consumer, that narrative has been, I guess, dashed a bit by the GDP revisions lower to personal consumption. That could be something that could be reflected in the PCE data as well. We could see services inflation actually moving weaker, almost offsetting any tariff-induced goods inflation. So keep an eye on that PCE data today. I do also want to mention the jobless claims figures yesterday do almost give a glimpse about labor hoarding going on within the U.S. labor market. We're continuing to see continuing jobless claims reach new cycle highs. They did that yesterday, but initial jobless claims came in better than expected. So again, it shows a fact that the jobless, the market for jobs in the U.S., that companies are maybe hoarding those employees, not necessarily hiring new ones. So it's making it very difficult for those without a job to find.
Yeah, if you're out of work in the US right now, that's an extended period of time for a lot of people. But companies are not laying people off actively. They're holding on to that labour and to those workers. That's really interesting as a dynamic as well. Valerie Totel, thank you very much indeed, with this flick ahead, of course, to the PCE data later today. Talking of data, we're going to get 7:45 a.m. French inflation data for prelim for June as well. We'll break that for you. 8 a.m. meanwhile, the Spanish prelim June CPI, so the inflation prints out of some of those key Eurozone nations, of course, through this morning. And at 1:30 p.m, we do have that inflation gauge out of the US, which on a year-on-year basis is expected for the month of May to come in at around 2.6% core inflation, or core PC, I should say. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. There's a big focus, of course, on the momentum around some of the trade optimism, with Howard Lutnick, of course, announcing that US-China agreement. Coming up, US Treasury Secretary, meanwhile, scraps, or at least the US Treasury is scrapping its so-called revenge tax proposal after a deal with G7 allies. We give you the details and the consequences, the implications. That is coming up next. Plus, later in the show, I'm going to be joined by the CEO of GetYourGuide to discuss how AI is transforming the way we book holidays and experiences. This is a company that's raised about $1 billion US, highly valued startup in the European space. Stay with us for that conversation. This is Bloomberg. Welcome back. The US Treasury Department has announced a deal with G7 allies that will exclude American companies from some taxes imposed by other countries in exchange for dropping the so-called revenge tax proposal from Donald Trump's tax bill. The president hosted an event last night to push senators to pass the sweeping legislation.
If the bill doesn't pass, there'll be a 68% tax increase. Think of that, 68%. Which would be the largest in history by about 40 points.
OK, for more, let's bring in Bloomberg's John Herskovitz. John, there must be some relief then from investors that this so-called revenge tax has now been dropped from the bill.
Sure. It seems like there was a lot of lobbying from corporate interests, foreign corporate interests, to get this out of the bill. It's the revenge tax was Section 899 is the official name for it, part of the tax code, and it's been something that it's been brewing for a while. Republicans were not happy with a global minimum tax that was negotiated during the Biden administration. This measure was seen as a way of protecting American interests from what Republicans saw as something unfair for countries and regions such as G7, Australia, Europe, which had these global minimum taxes. So the push was hard. The Treasury Secretary has asked for it to be removed from this massive spending and tax bill that's being debated in the Senate right now. But it also opens up difficulties for the Republicans because this is tax money which would have been coming in, and it puts a hole in some of the finances. Money which should have been there is not going to be there. So it makes it a little bit more difficult for this bill to proceed when there are a lot of troubles, a lot of difficulties going on with the negotiations for it now.
OK, good news maybe for some investors as that the revenge tax is taken out, but maybe an added complexity as this bill works its way through the Senate. John Herskovitz in Tokyo, thank you very much indeed with that update. Coming up, has Nike just done it? We switch focus to, of course, the clothing and sports clothing retailer. Going to dig into the sportswear giant's earnings rebound a little later in the show. Pre-market, the stock is up. Look at that, almost 11%. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news this Friday. State-run media reports Iran's foreign minister as saying no agreement has been reached on resuming negotiations with the US. The statement comes after US President Trump said during the NATO summit at The Hague that the two sides would talk next week. Trump says US strikes on Iran's nuclear facilities had obliterated them, though an early American intelligence assessment says Iran's nuclear program had only been set back by a matter of months. Bloomberg has learned that Andrew Cuomo has no plans to drop out of the race to become mayor of New York City ahead of today's deadline, despite losing the Democratic primary. That means his name will appear on the ballot in November as an independent. The former New York City mayor, Michael Bloomberg, the majority owner of the parent company of Bloomberg News, endorsed and contributed to the Cuomo campaign. And the mayor of New York, Eric Adams, has, meanwhile, relaunched his re-election campaign after Cuomo's shock defeat. Adams, who dropped out of the Democratic race to stand as an independent, will be hoping to win the support of Democrats who oppose Zohran Mamdani's socialist policies.
I'm so proud to be here to say to the people of the city of New York, I am seeking re-election to be your mayor of the city of New York. So you can call me all the names you want, but I'm going to answer to only one, Mayor Adams.
Former Barclays boss Staley has lost a legal battle to overturn his ban from UK finance over his relationship with Jeffrey Epstein, all but ending his attempt to rehabilitate himself in the British financial services industry. The judge in London sided with the Financial Conduct Authority, ruling that the executive misled officials about the nature of his relationship with the late disgraced financier. Staley has previously denied having any knowledge of or involvement in Epstein's crimes. Coming up, Howard Lutnick says 10 more trade deals are on the way. We'll bring you more of our interview with the US Commerce Secretary next. This is Bloomberg. Good morning. Happy Friday. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A deal is done. The US Commerce Secretary tells Bloomberg a trade agreement has been signed with China, with imminent plans for another 10 major trade partners. The EU says it is ready for a deal, but all options remain on the table. Global stocks head for a record after the Nasdaq closes at another all-time high on optimism over US rate cuts. Plus, revenge tax RIP. The US says it will drop its Section 899 tax threats after reaching a deal with G7 allies. Let's check in on the markets then. European futures on the front foot after modest gains yesterday, but European stocks are now set for a week of gains. Futures on the Stoxx 50 pointing higher by 0.5%. As you can see, FTSE 100 futures here in the UK looking to add just 11 points. S&P futures, after gaining around 0.8% yesterday, looking to add 0.1% and closing in on a record high then for the S&P 500. The Nasdaq 100 is already there, looking to add another 0.1% on that optimism around trade deals, around the easing of geopolitical tensions on rate cut expectations. Let's flip the board and have a look cross asset then. The dollar is gaining today. It's the first time we've been able to say that for 4 straight sessions. 4 straight sessions of weakness for the dollar. Today it's on the front foot, and that is putting a little bit of pressure on the euro. The euro then, the single currency, at 116, just down 0.1%. The Asian session has been positive, up 0.5% so far. Asian stocks set for their highest gains and their highest levels since 2021. And the US 10-year currently yielding 4.25. Yields were down again yesterday. Today yields are just up 1 basis point. The Fed, of course, continues to be in focus. Inflation gauge, the PCE, out later today. That will be scrutinised. And Brent at $68 a barrel, up 0.7% in the session, but set for some pretty deep losses for the week on that Iran-Israel truce. So that's a check in your markets. Let's get back to our top story right now, because the US says it has finalised a trade truce with China. President Trump has hinted that an agreement with India may follow, but he has warned that Washington won't cut deals with every country.
Well, we just signed with China yesterday, right? Just signed with China. We have everybody. We're not going to make deals with everybody. Some we're just going to send them a letter, say, thank you very much. You're going to pay 25, 35, 45%. That's the easy way to do it. And my people don't want to do it that way.
Meanwhile, US Commerce Secretary Howard Lutnick has told Bloomberg that deals with 10 other major trading partners are imminent. Here's more from our interview.
So the China deal, we inked the deal. You remember we had a trip to Geneva, and then that was being slow played. We got back together in London, and that deal was signed and sealed 2 days ago. President just said it just the other, I don't know, 15 minutes ago. And then he also suggested that we are, of course, at the very close finish line with India. Of course, the way these deals happen is their prime minister and their parliament have to approve it, and the president likes to close these deals himself. I mean, he's the deal maker. He loves to close it. I think we have deal after deal after deal. The president's going to make his calls. He's going to decide exactly the finishing touches on them. And then what we're going to do is we're going to lay out a structure of all the different kinds of tariff arrangements with different countries, right? There are countries with huge deficits. There are countries that are balanced. We're going to set that all up and get that ready for July 9th.
So it sounds to me, Secretary, and correct me if I'm wrong, as I listen to you, that we either get 88 deals announced in the next 2 weeks, or there's going to be action one way or the other by this administration that July 9th will be conclusive. If there's no deal, here's the new reciprocal tariff. Is that right?
Of course. So what we're going to do is we'll announce some deals, but basically the deals we're going to announce are sort of the head of the class, the structural spot in the line, and then all the other countries will fit behind those categories, right? So we're going to do top 10 deals, put them in the right category, and then these other countries will fit behind. So you'll have South American deals and you'll have African deals. You'll have it all structured and set up, and that's the model how you do leadership. And we will put these people in their proper buckets on July 9th. So those who have deals will have deals, and everybody else who's been negotiating with us, they'll get a response from us, and then they'll go into that package, and July 9th will go forward. And as the president said, if people want to come back and negotiate further, they're entitled to, but that tariff rate will be set, and off we'll go.
OK, Lutnick's buckets. The US Commerce Secretary, of course, Howard Lutnick. Now, the US Federal Reserve releases results, meanwhile, from its annual bank stress tests today. We're switching focus. They come as Wall Street banks and the Trump administration have been pushing, of course, for lighter regulation. Charlie Wells is here with an update. What are we looking out for in terms of the stress test results today, then, Charlie?
So, no surprises, hopefully. I think that's what we've kind of seen in years past, because U.S. banks are extremely well capitalized. They kind of learned the lessons of the past. And in prior years, all of the banks that have been subject to these tests, at least in the recent past, have passed. And what this tends to give way to is buybacks and share repurchases, because basically these tests determine how much capital banks have to set aside as a cushion in the event of some severe outcome. And so this year, the tests were pretty stressful. We know that the Fed's tests involved a severe global recession, 10% unemployment coming to the United States, and severe drops in the price of residential and commercial real estate of about a third of a price drop. And so that's the scenario that they've been facing. We'll find out in a few hours how they fared, but basically, once banks know how much capital they're going to have to set aside, they can start thinking about the stuff that investors love, which is these share buybacks.
Well, you talked about the fact that the banks are well capitalized in the US, and there's few who dispute that. Are they going to be sweating a little less next year? The Trump administration wants a lighter touch on regulation. So are they looking to change these stress tests?
There's a world where that happens because the Fed's top bank regulator has just changed. So we now have Michelle Bowman. She just went into post really a few days ago. And she was appointed by Trump. She's a Republican. She has said she wants a lighter touch on regulation. And she has sided with the banking industry on changes that they want to these stress tests. Because banks have argued that these tests are very secretive, that the models used, they have really no say in, but they are so significant because they determine how much capital they have to set aside. So Bowman has said she wants more transparency here, and the banking industry actually, in a very rare lawsuit last year, sued the Fed over these rules. So trying to ramp up pressure on Powell and on the Fed to change these stress tests. So yes, changes could be in the offing.
We're 15 years on from the global financial crisis. Are these stress tests still relevant?
So in some ways they are, right? And I think if you look back, one point of evidence is we, since that time, have not had the sort of meltdown that we had in the wake of the financial crisis. And we have had a recession. We've had a pandemic. We had a 2023 banking crisis. So in some ways, they're working. But, you know, industry executives have said that these could give a false sense of security. So Jamie Dimon has talked about this, about how these tests, you know, they pass. We're expecting no surprises today. And then they give this false sense of security, despite the fact that the banking industry in the past 15 years has changed significantly, right? We have the rise of shadow banking. We have a number of other changes, and there could be problems lurking that these tests just aren't picking up on. And so there have been proposals to change. There's one idea out there that maybe these stress tests should not be, you know, the main determinant in how much capital banks need to set aside. Maybe it's a more holistic approach that could work.
Yeah, there's always the concern, isn't there, that regulations like this regulate for the previous crisis and not for the next crisis. Charlie Wells breaking down what to expect then from those stress tests and the broader implications for the banking sector stateside. Charlie, thank you. Meanwhile, to a corporate, of course, focused on the retail and sporting space. Nike shares, as you can see, popping after hours thanks to a brighter outlook, hinting that CEO Elliott Hill's turnaround plan is starting to work. Sales are still expected to dip this quarter, but less than anticipated. For more, we're joined by Bloomberg consumer reporter Sonia Wynn. Sonia, is this then the start of a turnaround, finally, for Nike?
Yes, well, it could be. I mean, it was one of the worst quarterly performances Nike has had in years, and it was certainly painful. But as we can also see in the stock reaction, it was better than Wall Street has feared. And the CEO also said that the worst may be behind it now, as his turnaround plan is taking effect. So what he's trying to do is basically to undo the missteps of his predecessor. So that includes improving relationships with the wholesale partners again. The direct-to-consumer approach backfired for Nike, and it lost some market share to rivals like On and Hoka. He's also trying to improve brand momentum with new partnerships, like the one with Kim Kardashian, which could help bring shoppers back to the brand. So yes, it could be like the start of a turnaround, but of course we also still have to see how that's going to take hold over the next couple of quarters.
How are tariffs impacting Nike? How are they managing to engineer potentially a turnaround whilst also wrestling with the impact of higher levies?
Yeah, so the tariffs, they are definitely a big challenge for Nike. It's said that it will translate into around a $1 billion cost headwind in fiscal 2026. Its strategy is to mitigate some of that impact through strategies that include shifting away production from China to other countries. So as of now, it has around 16% of its U.S. footwear produced in China, and it plans to bring that down over the next couple of quarters to a high single-digit percentage. Apart from that, it's also looking at corporate cost cuts and potentially looking at how price hikes could mitigate that. But the main priority is to reignite that brand momentum. And the new CEO, Elliot Hill, he's renewing the focus on core sports areas, especially running. And of course, if that takes hold, then that would help it to get through those headwinds. There are some early good signs. So the new running shoes have received a warm reception. And also there has been some online buzz going on around new launches, upcoming launches like the Air Max phenomena. So if that energy translates into sales, it could help Nike to power through those headwinds.
OK, Sonia, a great breakdown of what we've been seeing from Nike and whether or not we are, in fact, on the brink of a turnaround for that company. Bloomberg's Sonia Wind, thank you. Of course, after hours, the stock is up almost 11%. Now, some of the stories making the news this Friday. Shares in China's Xiaomi have hit a record after strong initial orders for its new electric SUV. The YU7 is billed as a direct competitor to Tesla's Model Y. The company says it's received 289,000 orders in just 1 hour. Bloomberg understands that Afshar is a powerful executive at Tesla and one of Elon Musk's closest confidants has in fact left the company. It's the latest high-level departure during a volatile period, of course, for the electric vehicle maker. News of the exit has circulated internally among some employees in recent days, though the reason for the departure is not immediately clear. Coming up, how AI is enhancing the experience of booking an experience. I'm going to be joined by Johannes Reck, CEO of GetYourGuide. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the online booking platform GetYourGuide has launched AI-powered tools to help improve listings and to give suppliers more control. It's also expanding into experiences such as shows and events as the busy summer travel season kicks off. The co-founder and chief executive, Johannes Reck, is here in the studio bright and early. Johannes, thanks for joining us. And of course, this is a company that's raised, you and the team have raised over the lifetime about $1 billion from backers, including SoftBank, KKR and Temasek. You're profitable, I understand, as well. So you've got that massive funding that's come through in recent years. I want to start with the business, the here and now, before we get to the AI proposition. What are you seeing in terms of summer demand? We're closing on that crucial season. How much demand is out there?
So, Tom, first of all, it's great to be back on the show. And, this is a very interesting year. It started a little bit slow, I would say, after the Trump tariffs were announced with, consumer confidence, particularly in the U.S., being a little bit weaker. But we've seen a really strong rebound, particularly from European travelers in the last couple of weeks. And I do think this will be actually the biggest travel summer season that Europe has ever seen, with both American tourists coming in, but as well Europeans traveling all over to the big destinations, but also abroad. So we see destinations like Japan, for instance, are absolutely booming. But also new destinations like Albania actually show really good promise and triple-digit growth. So
that's really interesting.
Overall, our numbers are very strong. We're up significantly, so mid-double-digit year-over-year growth. And
is that bookings? Is that revenue?
Bookings, revenues compared to last year. So very strong revenue growth. Tens of millions of experiences already booked for this summer. So it's not only that travel is back this summer, but also the experiences industry within travel is actually stronger than ever before.
And you mentioned Trump. What are you seeing in terms of European and Canadian travelers heading to the US? Has that dipped off? Has that slowed down?
It has slowed down a little bit, but less than people might think, because I believe a lot of these trips were already booked 6 to 12 months ago. So international travel is booked typically, a year or so in advance. So we don't see as much of an impact yet, as you might imagine.
You talked about the experiences side of it and how there's this huge kind of pent-up demand that you're still seeing coming to the fore. Airbnb Airbnb. It tried experiences, didn't really work out. It's come back with the experiences proposition recently launched. Is that a challenge to get your guide? How do you see that move by Airbnb?
I mean, look, we're absolutely delighted that Airbnb has come back to the scene. They've had an experiences business already since 2015. They dropped it during the pandemic. Now they want to see that as one of the next parts of their business. And look, you know, a big player like Airbnb is always huge validation to the space. GetYourGuide is the top experiences platform globally by a large margin. And for us, that level of awareness for the category is just positive.
They're not going to take that crown from you?
I don't believe so anytime soon.
What are you doing? And where are you seeing the most impact from AI across the business and your offerings?
So you would think that you know, it's on the consumer side, but ironically, it's actually on the supply side. So we have more than 1 million small experience creators around the world. You know, from workshops that do food tours in Kyoto all the way to you know, the British Museum or, you know, Madame Tussauds here in London. And a lot of those players have had tremendous difficulty managing their listing. You know, from creating it to optimizing it based on customer feedback, pricing, availability, etc. All of that is difficult for these mid-sized companies. And now AI has had tremendous impact in helping them improve their listing, helping them improve their yield, their revenue on the platform. So we see already more than 2/3 of our suppliers use AI tools on GetYourGuide in order to improve their revenues on the platform. So that's been the biggest impact.
Johannes, how far are we from having our own tailored AI travel agent?
I think very close, to be honest. That's going to come over the next couple of years. But unlike people think, this is not going to be a ChatGPT agent or a Google agent. I'm a strong believer that actually the vertical experts who have the supply data and the consumer data in their apps will be able to offer the best assistance, and we're actively working on that.
Okay, I want to get you posted a post on LinkedIn in the last few days, really interesting, taking a bit of a swipe, or at least raising concerns about proposals within the EU to have US big tech, as you phrased it, have a seat at the table when it comes to the Digital Markets Act. And this is in terms of enforcing those laws that are meant to hold those US big tech companies accountable. So this is about ensuring there's competition in Europe in digital services. Just outline what your concerns are.
Look, Tom, the Digital Markets Act was designed to make sure that there's a level playing field between the big American gatekeepers, but not only American, but primarily the big U.S. tech companies that have had monopoly power in Europe over the last decades. And now it seems like the European Union wants to cut a deal with the Trump administration in order to lower tariffs and thereby weaken the DMA. That would be catastrophic for Europe. It would completely destroy our European tech ecosystem, because those very rules that are designed to ensure fair competition across the European digital markets were built up for a reason. We've worked with the European Commission for years, and these tools have just become sharp, and they are working, and it's just logical that the gatekeepers don't want them. But for us as Europeans, we cannot walk back. It would be absolutely detrimental.
Is the Commission listening to your concerns?
I sincerely hope so. I'm pretty sure that the teams within the Commission working on the DMA are listening, and they are very much in favor of what I am saying. We're in active debates with the big gatekeepers. It's also logical that the gatekeepers try to engage through the U.S. administration to weaken the stance of the Commission, but the European politicians, the leading politicians such as Chancellor Merz, cannot be weak on this. This is gambling with our future in Europe.
Okay, so a clarion call for Chancellor Merz and others to stand strong on the DMA when it comes to that challenge posed by US big tech. Before we let you go, just flipping back to the business, look, we talked about the fundraising, these incredible funds that you've raised over the years as a business, the fact that you, of course, seeing that incredible growth that you've articulated for us around bookings and revenue. What do you think, what is the plan around the IPO, Johannes? Are we getting closer to that point where GetYourGuide is going to be listing publicly?
Look, here on Bloomberg, we clearly see the capital markets are on fire, so things are really good. But we're not under any pressure as GetYourGuide. We are seeing incredible growth in our industry. We see that there's so much opportunity still out there. You mentioned that we went into new verticals like shows and events, workshops, multi-day trips. And there's still a very long pipeline ahead of us of what we want to do. So for the time being, we're heads down. We're very much focused on the business. But I'm sure at some day the time will come.
Okay, Johannes, thank you you very much indeed. Really appreciate you coming into the studio bright and early, walking through some of these issues, the growth that you're seeing, and of course the concerns been flagged around any adjustments to the DMA. Johannes Reck, co-founder and CEO of GetYourGuide. There's plenty more coming up. Stay with us. This is Bloomberg.
Through them, and if they're just not going to materialize, then you have to watch both sides of the mandate. And I think that's really important. It's not one or the other. It's both sides of our mandate that have really come into frame since we brought inflation down from the really high levels to something that's closer to our target. Ultimately, we have to watch both sides, and that's what I'm doing. And then the fall looks promising for a rate cut.
OK, the fall looks promising for a rate cut. Fed Bank of San Francisco President, of course, Mary Daly, speaking exclusively to Bloomberg. So the moves in terms of the repricing around the Fed are there, aren't they? They're fully priced now for 2 cuts for this year and starting to toy with the idea that maybe you get a third. We've ridden this rodeo before, of course, in terms of the markets getting a little ahead of their skis in terms of pricing. Maybe this time they're calling it right. We'll see the adjustments, of course, and whether, in fact, you get some dissents when it comes to that July decision from the Fed. Let's flip the board and have a look at how this ties into the equity performance, because we have now got the S&P 500 sniffing at the heels of a record high, and partly this is down to rate cut expectations, also, of course, the easing of those geopolitical concerns and the movement. It seems the momentum around some of these trade pacts, though how consequential each of those deals will be remains an open question. You've got, of course, the movements around US and China and that agreement being signed and sealed, it seems, according to the Commerce Secretary. So the S&P 500 closing in on that record high. Let's flip the board and have a look in terms of the chip space, semiconductors from April. You saw that dip down to April. And then from April, you've seen, in fact, the Philly index, the semiconductor index, actually up a little over 50% since April. So semis have been rallying hard. You've had the comments from Jensen Huang this week in terms of that continued demand just in the opening stages of that acceleration around computing with the embed of AI, is what Jensen Huang was telling investors this week. And then, of course, you had the results from Micron that beat on the earnings, on the quarter, and then, of course, in terms of their expectations, all of that leading into gains around the chip space. That momentum around AI certainly seems to be back. Now, Bloomberg Terminal users can access these charts and others, of course, used throughout the show. Just go to GTV Go on the Bloomberg Terminal. Next week, Bloomberg is live, by the way, at the ECB Forum on central banking in Sintra, Portugal. Joining us on Tuesday as Bloomberg hosts a policy panel, the world's top central bankers. That's at 2:30 p.m. London time on the 1st of July. Before that, though, the opening trade. It's up next. This is Bloomberg.